Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. Charles Rotblatt, that man about the markets for Zacks.com, puts this report together for us each week. He does a good job at it, too. That's why we keep bringing him back. He's with us once again, and on the Rotblatt radar, this kind of coincides with radar. Airlines, what you're looking at this week.
No pun intended.
Oh, yes, there is. And you tell us that even though it's a tough earnings environment, the estimates are flying pretty well on these companies.
They are, and it's interesting because we're only seeing really what amounts to a handful of companies, a handful of industries, approximately 11 that we're actually seeing more positive estimate revisions than negative. And that's out of more than 200 groups. So when you see this, you really want to look at those companies and say, what's going on that's causing these positive estimate revisions?
What's going on that's causing these positive estimate revisions?
Well, I'm glad you asked. The airlines, despite all the trouble and the old adage that if you want to make $1 million, invest $10 million in the airlines still holds. I think Warren Buffett called it one of the greatest destructors of capitalism. But so fundamentally, we still have these long-term problems with the airlines, but over the short term, there's some very favorable trends. One of the things we're actually seeing is that we're continuing to see the planes being filled up. The load factor, which is really a measure for how filled up the plane is. If you're a passenger, you want the load factor to be pretty low. If you're an investor, you want it to be pretty high. We're seeing that. Even American Airlines parent AMR said basically this past quarter was the third highest on history for the fourth quarter in terms of load factor. So these airlines are really packing in the planes. At the same time, we're seeing fuel costs drop. Some of the benefit from lower fuel costs is being offset by hedges. Again, that's something we saw with AMR's earnings, which were released Wednesday morning. The other thing is, though, those baggage fees have not gone away.
That's interesting.
It is, and I actually looked at bestfares.com, and I'm just looking here for the notes on there. It was most airlines are charging $15 for the first bag and $25 for the second bag. And if you go to bestfares.com, they actually list every airline and tell you what the fees are for those things. They also discuss pet fares and stuff like that. But these fees, we really didn't have them till last year, and it was all because oil was $147.
Right.
Now that oil's at about, I think, $42 a barrel as we record this, you're still having to pay for those extra baggage. So all those fees go really directly to the bottom line of the airlines.
But here's what I'm not getting. So you need to help me with this, because if I'm not getting it, some others might not be getting it too. Even though I am feeble-minded, I do understand that. But I saw a comment on The Wire this morning regarding earnings, and this person said, any industry that relies on consumer spending to pretty much any degree is going to be hardest hit. Well, this is one of those industries that relies on consumer spending.
It is, and that's what's really so notable about it is you're in the middle of a recession, and yet you're seeing analysts revise their forecasts upwards. And although they are having fewer people buying tickets, they're also offering fewer flights. And when you look at it, you say, okay, well, if they're cutting back on business, that's not good. But flying an airplane has a lot of variable costs. You have the cost of the fuel, you have the cost of the attendants.
Right.
But if you can pack more people on a plane, you're still not spending that much more in fuel. You're not spending that much more in labor. But if you can take two flights and consolidate into one flight, it's suddenly more profitable. Even though, say, instead of saying flying 300 passengers, you're flying 200. If you can put those 200 in one plane, it's actually more profitable. So what we're seeing is we might be seeing some cut on the revenues, but we're actually seeing margins improving simply because they have cut back on capacity. And most airlines are probably going to continue cutting back on capacity this year. Again, good for investors, terrible if you're a traveler.
You think this trend will continue for a fairly foreseeable future?
I do, and it's really something that needs to happen in the airline industry, and what happens after this is we really need to see some consolidation. The airlines have had a very difficult time of doing it, not only because no airline wants to be the one going out of business, but you also have to consider the unions, seniority among pilots, especially seniority among pilots, but you also have the mechanics, the stewardesses. That all makes these mergers tough, but at some point we will have to see the number of airlines condensed really to a smaller group of airlines. And although a lot of them have emerged from bankruptcy, to think that their fundamental problems are behind them is really foolish. This, I want to stress, is a trading opportunity, not an investing opportunity.
Interesting. Yeah, there is a difference there, isn't there? Charles does go out of his way in the text version of this piece to talk about some companies with some positive revisions. You'll want to check that out at Zacks.com. And you'll just want to check out the entire piece because it is interesting reading. And there's probably not a lot of time that we can get much more deeply into this here in this video. But if you're contacting or going to this video outside of Zacks.com, I'm so excited about this. It's just, if you're going to this video outside of Zacks.com, go to Zacks.com's homepage, scroll down that page, and go to the headline right next to Charles' picture, and you can get to the text version of this piece. With Charles Rotblatt, I'm Terry Ruffalo.